Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a huge week. Bitcoin is above $16,000 for the first time in years, and everything is just setting up beautifully. I'm going to go through all the macro news as well as those crypto headlines. You guys know that there's so much overlap these days, and that's all part of these stars that are aligning, the Goldilocks scenario that we see for Bitcoin and cryptocurrencies in a world of not only the monetary aspect, but the big tech and all that data that's also been, I guess, cracked down on. So plenty to get through. We do welcome a few hundred new subscribers this week as we creep closer to 100,000. Hopefully we can crack that before the end of the year. And guys, this was one of my favorite interviews of all time. I was so lucky to interview Mike Novogratz. I've been trying to get him for ages. And look, once again, just like this video and all our videos, we're not putting any ads on them anymore. So that means YouTube doesn't suggest them to anyone because YouTube won't make money. We also don't make money, but honestly, I think the whole getting rid of those scams and taking a stand against that is more important. So when you guys do share these videos around with your friends and family in crypto groups or any of our content, it really does mean a lot, and particularly our free stuff. So Collective Shift, there's a lot of free stuff on there still. So you can head over to our website, nuggetsnews.com.au. That'll now take you over. You can click on the Collective Shift link, and that'll take you to things like our Knowledge Center, where it's got all those beginner resources. We're adding to more of those every single day. And then if you do want to become a premium member, we've now got 3 different tiers, and you'll get all a range of things from my updates all the way through to our full-on deep dive research and the macro stuff, the gold and silver stuff, depending on what you want. So look, we've got a range of discounts for all our partners as well. I do want to give a shout out to Troy and Kyle. Those guys have been amazing. I guess just actively on socials with their free content in their own groups and in our group as well, just sharing the charts and all their info. So big shout out to those guys if you do want to learn how to trade. Okay, let's get into the local news here, where once again, we're kind of hearing that things are on the improve, and they are to some degree. You know, Josh Frydenberg here saying nearly 500,000 jobs have been created. If you look under the surface, I think it was something like less than 10,000 full-time jobs. So once again, the metrics are just being skewed. Who would have thought that, as Alex Joyner says here, that the best retail conditions in over a decade would have been caused by a huge recession and a pandemic. But anyway, consumers are pretty confident all of a sudden again. And I think maybe it is because all over the news and we're hearing about house prices bouncing back. So Chris Joy's been a bull on house prices, and he's certainly telling the doomsayers that they were wrong here. I talk to Chris occasionally, but I guess one thing that I've always said on the channel is once Australia goes down the path of low interest rates, then all bets are off, the fundamentals are out the window, stocks will go higher, property will go higher, the rich will get richer. It's exactly what's happened in the US and other places, and Australia is going to go down that road now. So look, this is 80% of savers now are getting less than 1/4% on their savings. So, about a quarter are getting a quarter. Either way, it's still crazy low metrics when you consider that a lot of the boomers that are retiring are dependent on that. That forces them to speculate on stocks. That's something that even our RBA head, Phil Lowe, addressed himself, that he knows that it's going to push people to do those risky things, but he's kind of okay with that all of a sudden now that he's backflipped and joined all the other central bankers as well. One thing that is disappointing for me to see is we heard firsthand from all these witnesses, the fallout from the Royal Commission. Commissioner Hayne, he was very, very adamant about the need for this, and it's just not going to change. And let alone are they not doing any of these recommendations, now they're backflipped on the changes that they had made. So rolling back responsible lending laws is a bit of a slap in the face. And I think it's almost like the banks are running Canberra at the moment, and normally maybe they would be a bit harder on them, but I just think it's because they know that they can't let this bubble deflate, that they've just got to keep pumping up this housing bubble, and it's worse than the alternative of having a housing correction or crash and making it affordable for the majority, because those that are wealthy and that have invested in 10 properties would lose money, and we can't have the wealthy losing. We can never let asset prices go down. That's the thing that central banks are scared of. So here's the deferred loan data. We've only got 4 or 5% of mortgages that are remaining deferred at the moment, down from that peak at around 11 to 13%. So a lot of people have started paying them. Look, it is good that the JobSeeker supplement has been extended. I think if you have a look at these numbers, a lot of people were drawing down their super, and look, 300,000 is a lot. But remember back then we weren't sure if we we're going to extend JobKeeper, and there was so much uncertainty. So some people might have taken it out, genuine misunderstanding and not for the right reasons, but other people, you can argue, didn't know what was ahead. So this was a good article outlining why stocks and housing are just going to boom. Forget the recession and wages are being stagnant. We're drawing down on our savings. It's just none of that really matters anymore. One of the biggest drivers was immigration, and we can see temporary visa holders, 150,000 down for students, 250,000 down on tourism, work holiday makers. So these are really big numbers, grand total nearly 500,000 year-on-year change. I don't think people's travel habits are going to go back to normal. Look, maybe 50%. Let's wait and see how that plays out. But these are the big drivers that just aren't coming back. But all of a sudden, it's the monetary policy, and it's the wealthy that already had a lot of money that are going to start buying houses. It's not those fundamental drivers, the same drivers that we've had for the last 30 years. The other big news here is that China continue to slap tariffs on more and more Australian goods, and Reuters here is saying that they expect these technical issues to be over soon, resolved. I don't see that at all, but hey, maybe they know something we don't. We've got Chinese authorities preventing an Indian vessel packed with Aussie coal from leaving Chinese waters now, even after Japan agreed to purchase this, months, and we've got this standoff at the moment. So these are the things where, man, oh man, this is causing a lot of tension with our number one trade partner. And look, these are the kind of things that a vaccine isn't going to fix no matter what. Look, we've got rumours lately that Australia's Future Fund might have even been investing in Bitcoin. But hey, I don't know if that's anytime soon, but that is something to keep an eye on, because that is something, a whisper that I've heard. I asked my friends in the know, and they said, look, not in the next 12 months was what they told me. But look, things aren't all rosy in China, and I think in some ways the tariffs are a bit of a punishment on Australia. But I also think that under the surface, the market isn't as good, the economy isn't as good in China as they're saying. So credit markets are plunging, they're facing a lot of the same issues as everywhere, and they don't need as much of our resources. So by slapping these tariffs, it's kind of almost a bit of a sleight of hand, where they don't want to say that, hey, we don't need those resources. They'd rather try and play a bit more of a bully role, I guess, and that way they've got Australia where they want them if we I guess, bend the knee to them first. So that's the standoff that we're currently in at the moment. In terms of the actual virus numbers, they've continued to trend higher, and it's not so much the numbers that you should be focused on. It's always been the hospitalizations and things like the deaths. That's what we actually want to look at. And we've now got to the point where the US hospitals are starting to reach capacity in a lot of places, and that is something that we don't want to put our health staff under. A lot of the evidence is showing that the majority of the health staff that catch it are the frontline workers, and it's like a level of exposure thing that I've spoken about as well. Now here we can see those kind of waves, and that we're back up to this 60,000 hospitalizations. That's a 7-day rolling average. So that is a lot. Daily cases, 60,000 a day going to hospital. I think for a lot of people it's kind of out of mind at the moment. And look, we're a long way off. I know that Pfizer had this good news article, and 90% of cases are being prevented. I'm not so sure about that. It was funnily enough that the Pfizer CEO cashed out 60% of his stock on the same day as that company announcement was revealed. Now, they're also saying that this was kind of pre-planned in terms of the sales, but I just think there's way too much of a coincidence for you just to turn a blind eye to that sort of thing. I wanted to throw this one in there as well. So Kodak actually have been caught letting former execs sell millions of dollars of options that they didn't even own. And it's kind of funny. Remember how Kodak a few months ago pivoted and they were in the race for a vaccine as well. So I thought I'd throw that one in there. Investors are seeing this as an all clear for the reopening rally. But I just think that if you look into the study, if you look at everything else that is going on at the moment, it's just such a long way off. This isn't going to make a difference in the next quarter or two that Wall Street is going to look to for earnings and those types of things. So investors plowed into these global stock funds in the days after Pfizer unveiled those results more than any week in the past 2 decades. New commitments were driven by large institutional investors. So a lot of money is flowing in, but have markets gone a bit rogue? After we pitched some tough questions, and I mean, even after I read the announcement, I sort of said I think markets are overreacting a little bit here. We've already got this news that there's different strains and mutations in different countries, mutating in animals and then jumping back to humans. We've got some news out of Denmark, I think it was here. So they're the sort of things that we're going to keep seeing. And it's not the case that all our problems are solved now, which I think maybe the market kind of had this knee-jerk reaction as if that was the case. We're also seeing some of the big giants, and I think I said something like this would happen when all those big corporate clients that own the commercial real estate, once they're all empty and they're losing money, well, remember, the rich don't like losing money. They want to change the rules. So now they want to try and tax you from working from home. Remember a few months ago, they were trying to say that it's not safe to work from home, occupational health and safety. Maybe that didn't work. So now they're trying to tax people to work from home because they just don't want to ever lose money. And it's so funny how things like that, it's just always against you as the little guy. And that's why hopefully decentralization is going to help solve a lot of these things. US producer prices rise 0.3%, but there was the food and gasoline. Once again, sharp increases in those things that people actually pay for in everyday life that aren't always included in those baskets that measure CPI. So a lot of the alternate data is showing that the economic activity crashes, even though maybe stock markets are at those record highs. It's rolling over in Europe and a lot of countries, the actual economic data. So this is the US, similar to Australia. This is how much the income risk from expiring fiscal aid. And it is sort of down here to this September part now. This is the forecast, but I think we're going to have to see, and this is stalling again, and every week that goes by, this is going to get worse, but these are billions of dollars. I think we're going to need another 3 or 4 trillion to fill this gap, because what we're currently seeing is, we'll get to the food bank stories in a moment, but it's millions of people that are starting to default on mortgages. Now, this is the same in Canada, so huge jump in insolvencies. Trudeau's started to talk with the airlines. So every country's in the same situation. Huge defaults with the airlines, hotels, individuals. 500,000 people. These are working poor. A lot of these people have jobs but still can't afford food. And these food banks are struggling now. So this is where you get that sharp inflation in food prices where we're not producing as much as well. Now, I want to throw this one in here. This is possibly one of the greatest trades of all time. Bill Ackman put on these huge positions at the top of the market in terms of these credit default swaps. So he was betting that a lot of these mortgage-backed securities, and just like the GFC, a lot of these things were going to need the insurance, and the insurance would pay out. So he was betting against this. I think he bought $27 million worth, and it paid out $2.6 billion. So he basically got a 100x return in a few weeks, and he timed it perfectly at the top when markets were ignoring the risks, and then he got out at the bottom when a lot of people were thinking, this is going to go a lot lower and whatnot. So look, I just think in terms of what was happening around the world and what was being fed to the mainstream and what was being fed at the bottom and the panic, and to 100x a little investment is just an amazing return. And the thing is that he's put on the same position again, which I just find absolutely astonishing. So like I said, it's these big hotels. 80% of New York hotels are now under pressure. So $4 billion just from the New York hotels alone. Now, about 50% of these are already transferred to the debt collectors, and over 80% total here are in trouble. So that's the sort of numbers we're looking at. Restaurants like Chipotle are looking to go digital only, so taking those jobs away as well. The corporate loan demand is now at the weakest since the financial crisis. So these are domestic respondents reporting stronger demand for commercial and industry loans. And it's just dropping now sharply. So at the start of the year, we kind of had a big increase. Everyone was just desperate. But now it's more the reality, rubber hits the road in terms of those loans. So, look, COVID crisis triggers the most credit insurance payouts since 2009. That's similar to what we're just talking about with Bill Ackman here. But I thought we had a chart there. That's all right. There we go. So, cashing in. The number of credit default swap auctions high since 2009. And this is in billions of dollars. Amazing stuff. Bond defaults, this is what we've spoken about in previous weeks as well, preparing for 99% losses in some sectors. So these are all the things that the Fed are going to have to bail out. Now, I think most of you remember the chat that Steve Keen and I did about turning Japanese. The world is going down that path, and the world should learn from how Japan struggled to, attempted to save its struggling banks, and they just ended up bottom bouncing. And what that tells us is that idea of low interest rates and QE, it just doesn't really work. But exactly like we said in Australia, they're just going down that path anyway because there's nothing else to do. I think the Fed are really going to have to step back in very soon and flood the system. It doesn't look like we're going to get the fiscal spending, and the Fed are sitting on their hands at a time when other central banks are stepping up. So a lot of quants got shocked this week. This is something that could never happen. And I think we had I think it was 10 or 15 sigma moves. So in terms of standard deviations and the VIX, the volatility index, trying to price this stuff in, this is like once in a trillion sort of stuff that should never even happen. And this is what we had play out during the week. So $44 billion in inflows after the vaccine optimism. But if you have a look at where that money went, remember we've been talking about this theme that value investing doesn't really work anymore and all those assets are kind of a bit unloved. Now, a lot of money went out of the speculative tech, software plays and into real things this week, but not necessarily oil. Look, a lot of people are saying that oil prices can only go down. OPEC couldn't reach an agreement. We've got all those US shale producers, which as long as oil's going down and all these countries are pumping more and more, they're in trouble as well. They've all got those corporate loans and the CLOs that can default. Whether or not this is part of why the US are going to go so hard on Iran with more sanctions because of the role that oil is playing or because they're using Bitcoin to get around sanctions now, I just think that is such an interesting space to watch as well. But this is the historic day we saw. So global energy stocks. This is their third best day in 25 years in terms of the percent return. So that sector jumped around 12.5% in a day. This is the momentum reversal. So where did all that money come from? It came out of all the momentum stocks, the tech stocks. It went into the value stocks. So, we've been talking about value versus growth and all those charts about commodities versus tech, tangible versus intangible. I absolutely love this chart talking about where investors are placing their money and how much it accounts for the S&P 500. Back in 1975, only 17% of all those assets were intangibles, and we had factories, building things. And now it's a lot of this software, customer data, extracting value. And that is all going to change. That's what we've been talking about. Investors are just writing these blank checks, these SPACs, where there's a lot of risks. It's like the dot-com bubble, and this is where we kind of have almost reached that speculative mania. And maybe it did all change this week. Huge outflows from the triple leveraged NASDAQ ETF. These are the dangerous products that I keep telling you to avoid. I'm kind of glad that a lot of these aren't available in Australia because they're the things that the Robinhood traders just continue to pile into. I guess other themes that I've been telling you are likely to happen that the market was ignoring was the clamp down on big tech. So whether it was China, and hey, they've stopped the Ant Financial IPO, and that is a huge blow to, I guess, confidence in Chinese investments. If they can just stop one of the biggest IPOs of all time for one of the biggest players who's normally on good terms with the Chinese Communist Party, that's pretty scary stuff. And I think it is a lot of capital is going to want to go out of China. Maybe that is, again, a good thing for Bitcoin, but that's just one of the things that we've got to worry about here. This is the huge change. You can see it visually, the energy stocks versus the S&P 500, the NASDAQ, one day change, 16%. Big tech shouldn't breathe a sigh of relief over Biden getting into power either. So he is also going to help continue to push these I think, the breakups in a lot of ways. So the EU are hitting Amazon with these major antitrust complaints, $28 billion worth. We've got the herding of these naive Robinhood traders. They're the ones that have just been going into all these big tech stocks with their options, with the momentum, with their favorite influencers on Twitter or whatever it is. And they've just been ignoring all those risks that we just touched on. And there's actually been a lot of data out this week saying that if you had have bet against these Robinhood traders, it would have been a great way to make money. And this is why a lot of the big firms are paying so much money for all the Robinhood data. So not only can they front run these trades on a low time frame with the high frequency trading, but they actually want to do the opposite of the retail traders who will do the wrong thing at the wrong time and trade on emotion, all those things that we talk about, who's on the other side of the screen. So Stan Druckenmiller is saying that he wouldn't be shorting the market, but he does see this rotation continuing. And obviously it was massive news this week. We'll get to it in the crypto section for Stan Druckenmiller, probably one of the best investor of modern times, along with Warren Buffett, to come out and say that he owns Bitcoin. He owns a lot of gold, but he does expect his Bitcoin to outperform the gold. Massive stamp of approval and that's just, I guess, a sign of all this money that doesn't really have anywhere to go now. So you look at the US 10-year Treasury rate. This is where typically people have gone, seek a bit of safety, get a bit of yield on bonds. You've made good money on stocks. Where are you going to rotate to? And I just love this chart. It's showing the sort of the inverse, the US Treasury versus a lot of the tech stocks here, and perfectly inversely correlated. And it's kind of, there's a few articles out this week showing you how a lot of the tech sector is just all about real interest rates and speculation, and I'd also argue just about the liquidity. So when the Fed print more money, it's basically passively or even directly, we know some of the central banks, they've just been buying tech stocks when they print more money. So that is basically showing you that relationship there to yields. Junk bonds have hit their lowest level in history. You would think that with all that risk we just spoke about, junk bond yields would be so high at the moment to pay investors for that risk. But they've just capped it. Greek bonds went negative. So investors, even though there's all this risk out there that Greece are going to default, you've actually got to pay Greece to hold your money. You've got to pay them to give you no money back, and maybe they're going to default. This is because the central banks have just printed so much money to keep rates low, and this is just unbelievably distorted. I mean, it's going to be repriced eventually. It's probably going to have one of these crazy spikes, and that is where we get to the point again where the Fed can't let that happen. The ECB, all the central banks will have to step up. We see things like the insiders now. This is massive. I show you this every week. This is the highest it's been since I've started reporting it. They're just selling all their stocks, the insiders. So the ECB has had to repeatedly fend off all this criticism about the monetary policy that they're doing. Their balance sheet as a percent of GDP is now crept up to 70%. So, the central banks, it was only back here, 2008, 2009, or before the GFC, when it's around 10%. A central bank shouldn't be making up a huge percent of your economy. And around the world, Japan have passed 100, but ECB, Australia now, it's just creeping up in terms of how good your economy, what are you doing? Are you producing things? And we're not. This is the problem. They've created those incentives, and now they're the only ones that are left to buy. So as I said, maybe Greece are going to start to dangle these tax breaks, and then another country wants to do it. And then all of a sudden, everyone's moving there, the money and the investors. And so the next country has to do it. And then all of a sudden, no, it's a race to the bottom in terms of offering lower tax. So we need complete structural overhaul. And I know people hate the term, the big reset, and there's all the conspiracies out there, but something has got to change because we've gone past that point where the system is now broken and people are exploiting it. This is the federal spending in the first month of the fiscal year in the US, $500 billion, $500 billion in the first month. These are just getting to these staggering figures where the next lot of QE, when people rush to the exits when they think there's going to be possibly a default, or maybe the US are going to, they've just spent $500 billion. Does that mean they're going to spend, $6 trillion this fiscal year? And a $6 trillion, does that mean it's going to be another $3-4 trillion deficit? Does that mean the year after is 5? Are they going to be in $100 trillion deficit in 10, 20 years' time? Who on earth would want to hold those bonds if in 30 years' time you're going to get paid back with this money that they've been printing 25% more of every year? Okay, that is what you've got to think about it as. There's no point holding money on a negative yielding bond which you're not getting any return on to get paid back in this funny money. And all this money is going to run for the exits at some stage when they lose confidence in bonds. 17 trillion in negative yielding debt. And the Fed are going to be the only buyer of that, I think, the central banks. So you guys love this number. We report it every week. Physical gold ETFs. It's just continuing to grow. Big demand for gold. It's the logical place to go. Yes, it's a pet rock with zero yield, but hey, all of a sudden that's looking pretty good with everything that's going on in the world and all the negative interest rates. So another crisis imminent. Just as I said, mathematically the Fed will probably have to double their QE efforts. And remember, they're already going at a pace that's way higher than at the peak of QE3 and those emergency measures. So these are just insane headlines that I'm reading to you guys, and it kind of feels crazy that a lot of people have still got no idea that any of this is happening and that there's big change coming. So Pelosi's warning that, yes, it's dragging on, the house is burning down. I completely agree. There's millions of people that are defaulting on their mortgages, going hungry. They should have passed something beforehand. And now we've got the butting of heads where Trump's still saying that he won, Biden's claimed victory, there's recounting going on. I thought it would be pretty one-sided, but then we've actually seen that some votes have been overturned or cancelled. So I think it's all going to get very technical, and it's not my area of expertise at all. But I'm just going to go on the headlines and what I read and read both sides of the story. And on that, I'd say that there's no end in sight just yet. So hey, we've got to be aware of that. Into the crypto news, guys. I know there's so much happening and I go through it every Sunday, but if you are busy, don't forget we've got the daily snapshots now. We've got our headline analysis of the macro stuff, our research reports, our crypto reports, all the resources in our new app, Collective Shift. I've been saying it's a couple of weeks away, nearly all year, so it is here, guys. If you're not aware yet, head over and check it out. Check out the free stuff as well, even if you're not signed up for all the paid stuff. And our beginner's course, we've got a beta version out of that now. If you've got your friends and family that are haggling you with, how do I get into crypto? Should I buy? All those answers are there, everything they need to know. So take advantage of that before we get out the full version, and let us know how we can improve that for you as well with any feedback. So I mentioned this before about Ant's suspended IPO, and it's a bit of a knock on confidence of Chinese investors, but it may be related to this digital yuan that China are coming out with here. So anything that's competition to that is going to be put the brakes on by the CCP. So interesting there. In the US, we've got Biden confirming crypto-savvy Gary Gensler will lead the financial policy transition team as well. So, hey, the more crypto-friendly people we have, the better in Congress and their advisors. Even the BIS has come out now and saying that physical cash will still play an important role, even if central bank digital currencies take over. So some of these central bankers seem to just be flip-flopping, and it's the smaller guys that are pushing the narrative that have got nothing to lose, like I told you would happen. So Lebanon are preparing their central bank digital currency for rolling out next year. The EU will decide in January 2021, and then the next article we get says that, hey, we've got a hunch that it will launch in 2 to 4 years. So they're going to decide in January next year, and then they might launch it in 2 to 4 years. I think this shows you how far away the US is, and probably Australia as well, at a time when China are trying to push hard and get it out there. So look, all the banks will have to adjust to not only central bank digital currencies, but to crypto as well. And I think that's why we see, whether it's traditional finance or fintech as well, partnerships. Obviously, the big news is like PayPal getting involved because they don't want to get left behind. They've got to pivot and stay relevant. Blockchain voting is the alternative for these trusted democratic elections. Now, obviously, I was a big fan of Horizon State, the little Aussie project that was doing blockchain voting, and it's kind of funny that projects like that had a good, interesting narrative, and now everyone's talking about it. Look, Horizon State are actually still going. They had a good interview on YouTube I saw the other day, and look, I might try and hit them up and see what is going on there because, yeah, everyone all of a sudden is talking about the need for blockchain voting. So You're only ever a few partnerships or a government, I guess, sponsorship away from maybe getting back up and running, but let's see what happens there. Galaxy Digital's Q3 earnings mirror the crypto euphoria. So our mate Mike has had some pretty good earnings with that bull run. They've made 2 acquisitions as well to strengthen the institutional appeal. Remember we spoke about the institutional investor that just wants someone to hold it for them and insure it and custody it. So solving those problems. I think the Mike interview on podcast and YouTube's over 30,000 now, but seriously, guys, this was one of my favorite chats of all time. Head over and listen to it if you haven't already. A digital currency group IPO could fetch $4 billion. We've heard that like Coinbase could be worth double that if they ever were to IPO. So I do think in the next 12 months we'll see the first big IPO from a crypto exchange or business. It's just making crypto more and more relevant and interesting and getting traditional world involved. So I just kind of love sitting there and watching this space, how well it's going, how quickly it's growing at a time when the old system is crumbling. Okay, so Cardano partners with stablecoin maker Terra, in bid for expanding their DeFi offering. This is the one that Mike spoke about as well in that interview. I think they've got a lot of partnerships now throughout Asia from what he was saying. So awesome to see. South Korea was where Mike was talking about, wasn't it? It's awesome to see this sort of thing taking off in all those countries that really need it. Now, PayPal's service went live, but not only that, they said they had so much demand, they wanted to increase the limit to $20,000 a week. And they've just rolled it out all across the US. I know plenty of people hit me up and said, wow, this has literally just come up in my phone this morning, shared those screenshots. Now, Itbit is the provider for PayPal. So this is a 7-day chart. Raul also, when I tweeted this out, said that, there's some very good friends of his that own this exchange. So, look, Itbit is not very well known, but they are one of the older ones, more legitimate ones. So when we have a look at this weekly chart, where are we? We're into the weekend now. Let's just go monthly chart. Back here, so they're doing $1 million a day, up and down a little bit still, but there's definitely trending higher, and they had their highest $24 million this week thanks to PayPal. So this is something that I'll be keeping an eye on. And if this gets up towards $100 million a day, we know that the retail investors are coming through PayPal. So something to get a gauge of retail sentiment, along with our sentiment reports and Glassnode, everything else we look at, I guess. All right, so crypto's largest exchange, CEO CZ, is speaking out about regulation and trends. Binance are kind of bouncing around regulatory space as well. Probably not much more to say there. It seems like they're in a different jurisdiction every year. EU lawmakers are cracking down on these encrypted apps, so Signal and WhatsApp. Now, I think that this is similar to Australia, where they wanted this backdoor and no encryption. It only makes the bull case for Ethereum and other ledgers just stronger. So, little Aussie project Loki had a massive upgrade during the week. Oxen. I've spoken to them a couple of times on the channel and about them as well. So, not only a privacy coin, but a privacy network and layer that you can build apps on top of. And one of the apps they've gotten they're working on is a messaging app. So this one had a very strong week, and well done to the Loki guys. Okay, so NFT news. We've got an NFT whale dropping 100,000 on these NFT cars. So once again, it's the beauties in the eye of the beholder where we see these big numbers being paid, and it's more about the artist really. You've got to think about it that way as well. Did I have some more NFT news? Yeah, Polychain Capital. Oh no, so let's just touch on the Bitcoin Cash. So look, Bitcoin Cash have been in the news a lot lately. I did a whole episode in that live video the other night, but this is a contentious hard fork. Just be aware that a lot of the exchanges are treating this differently. So some are freezing deposits and withdrawals, and they're waiting to see which of the split of Bitcoin Cash gets the most hash power, gets adopted, the price. So just be aware that that's happening if you're holding any Bitcoin Cash. It doesn't affect Bitcoin users. So DeFi news. Polychain Capital invested $8 million in Wi-Fi, a project that I still think's got strong fundamentals. A lot of people laughed at me when I say that and they think I'm shilling it, whatever. But hey, let's just see where it goes. Time will tell. A good report about the top blockchains by development here. I was a bit surprised during the week that Cardano were at the top of that list for November. So congrats to the guys at Cardano. That's awesome to see. Polkadot, the testnet, Kasama, Gnosis, Solana, Cosmos, Atom. So it's great to see plenty of chains either competition for ETH or interoperable. I think we're going to see way more, I guess, integration, interoperability, and everyone's friends in a bull market. Okay, so this is API 3. This is closed a $3 million funding round with Placeholder and Pantera. These guys are giants in the space. Trying to solve the Oracle problem. Everyone's trying to be a Chainlink competitor. There's probably half a dozen now, isn't there? We hear about all these Chainlink competitors, but I think that is a solid one that you should put on your radar. So Synthetics have launched their crude oil futures contracts, and this is just going from strength to strength at the moment. So exchanges like FTX have added oil and other products and synthetic products, but then we've got the actual synthetic DeFi versions of these, which continue to be added to. And the beauty with Synthetics is because it's an actual synthetic product, there's very little slippage, there's almost endless liquidity. A beautiful platform. If you haven't tried it out, head over there and check out Synthetics. Another Aussie project that's done really well here. This is Sharing. I am planning on having them on the channel sooner or later, bringing their blockchain identity solution to Rakuten travel bookers over in Japan. So that is awesome. They are an absolute giant, and they've chosen a little Aussie project for their identity solution. So well done, guys. Exchange tokens are skyrocketing because they're more like equity. Yes, we kind of know that. We understand that. HXRO. So that's a cool little website. If you've never checked it out, where you can kind of just bet on the price going up or down. It's almost like a gamified options exchange. I might do a tutorial on in future. But now we're in a bull market. When altcoins start moving, exchanges make more money in fees. Exchange tokens go up. So there's a couple of ways you can play that. FTX have actually got an exchange index, or you can do your research and pick the individual coins. So maybe you think OKX is undervalued, or you can look at the volumes that FTX are doing compared to Binance and say, well, how much is each token burning each time they're doing and giving out in, or collecting in fees? Is one undervalued? Is one overvalued? So depending on your level of expertise, you can start to pick and choose which exchange token you want to invest in if we're going into a bull market. BitPay have launched their mass crypto payments for businesses. I'm not sure if anyone's wanting to pay in crypto other than in stable coins if we get into a bull market here. But we've got DeFi Zappa snagging funding from Delphi and Coinbase Ventures. So Zappa is a interface where you can go to, connect your MetaMask wallet, and it'll show you everything that you've been doing in the world of DeFi. So really cool stuff, because I know it's hard to manage all the different things if you are a bit of a degen and you're doing a lot of yield farming and you've got loans everywhere and trading. So you want to use those interfaces like Zappa. So Uniswap farming ends in 4 days, and this article was on the 13th. What are we today? We're up to the 15th. So on Tuesday, Monday, US time, this is going to end. Now, a lot of people are saying that it's going to free up a lot of ether. Maybe that's going to go elsewhere. But does it mean that a lot of the Uniswap tokens that people are just getting and selling, that dumping is going to stop? Maybe that's good for the uni price. It can eventually get in a bit more of an uptrend. Obviously, DeFi tokens have all performed really well lately. We might look at it when we get into the charts. But remember how people just thought DeFi was dead, and now all of a sudden everyone seems to be talking about it again, and individual projects or whether it's some of these that are still getting hacked are obviously putting a little bit of a dampener on things. Akropolis is one that's been pretty widely spoken about. I don't know if shield is the right word, but it seems to be spoken about a lot. They had a little $2 million hack this week, and Value DeFi came out and promoted themselves as the safest protocol. So have I got a picture here? I do. So this is their tweet that they've since deleted. Why is their multi-stable vault the most secure and advanced piece of tech in the DeFi space? So they literally said it's flash loan attack prevention, and then sure enough, they got flash loan attacked. So that is putting a target on your back if you've ever seen one. So guys, a bit more humility maybe in future. Good news for Red Fox Labs. They've announced that they've added this RSK token bridge, so seamlessly moving the tokens between the two blockchains. This opens up the world of smart contracts on Bitcoin. So Rootstock is a smart contract layer on top of Bitcoin. Red Fox can start to do their NFTs or micropayments or token transfers on top of Rootstock. And that is going to bring in the Bitcoin crowd, the Bitcoin developers, maybe even the maxis, because you're building on top of Bitcoin there. So well done to the guys at Red Fox. And the liquidity over on their on the Uniswap pool is amazing. So remember, this is a project with 15 million market cap, and the other day it got over $800,000 in liquidity. Now that is an amazing effort for the size of the project. So well done, guys. Uniswap community call, they're going to discuss extending those rewards for the reasons that we just touched on, whether or not they're worried about the liquidity locus leaving and going elsewhere. I think that they're going to do another drop soon as well. So hopefully users of Dharma and Maker and some of the other old school apps are going to get more uni. I'm pretty excited about that. And here are those charts that I spoke about before. When everyone was saying that DeFi was dead, obviously I speak my mind and my strong conviction when it's there. And it's not hard to be bullish and buy the dips when number of users, total value locked, all these metrics were just going higher. And this is from the June analytics site. Literally, markets topped in April. And I guarantee you that everyone that panic sold, or the maxis that were bashing DeFi, had no idea that all these metrics didn't even have a little bump here at all. They just continued to go parabolic. And now markets are going to have to reprice that in. Maybe DeFi is going to lead this rally. Maybe it can lead Ethereum higher and that leads Bitcoin. I'm not sure. But at the moment, some of these are up. Lend is up 200x since we covered it. And when was this? Only back in November 2019. You could have picked this one up for 0.3 of a cent. That is unreal. Even back in February 2020, it was still only trading for, a cent or two. And here it is up at 27 cents. That was back in June, July. I think it hit 60 or 70 cents, possibly more this week. 200x return. I mean, how is that even possible? And it continues to charge high because I think it is a case of the good projects have good announcements. Slow moving exchanges like Independent Reserve, they've started to list more of these DeFi projects, and that brings in the more slow moving money as well. So I just think that it's hard to, that ship is not turning around. You saw the metrics, it's all still heading in the right direction. So invest in those good projects. MakerDAO has passed $1 billion in DAI. They've started to raise their fees. That means that it's going to produce more revenue. Again, people just are not aware of this stuff. And the smart money is. That's where the smart money is going to flow. Liquid stake is another way to help unlock that liquidity for ETH 2.0. So I'm going to do an episode on all the different ways that you can stake on Ethereum 2.0. Some of you will have heard of Rocket Pool, but there's probably half a dozen ways out there now that all have different pros and cons. So I will cover that in an episode soon. Celsius has doubled its crypto holdings to $2 billion in the past 6 months. Amazing stuff there. And I do think they are probably one of the better ones if you're going to have to use CFI, centralized finance, instead of DeFi. Speaking of centralized versus decentralized, boy, didn't this cause a bit of a ruckus. So people were saying that Ethereum centralized because Infura, which is a node provider, had a bit of an outage and many companies got impacted. So people like Binance and exchanges said, whoa, what's going on? Has there been a chain split? We can't tell what's happening here. So they're going to just freeze deposits and withdrawals. Now, I'm not sure if technically or not you want to call this a hard fork where we technically had two Ethereums, but it was because the exchanges weren't running their own nodes. So the reality is that nothing that bad really happened. If you had been running your own node, you would have seen that and it would have been fine. And this shows you that everyone is just relying on Infura, which is a service that runs a node for you, rather than running their own node. So exchanges, get your act together. There's no excuse not for running your own nodes, and you shouldn't cause panic like that for no reason. Binance are also launching their Ethereum pool with 0.5% fees. We'll touch on that in that episode. Another Indian exchange launching as well. So everyone is going to get on board this. And I think that's going to add to a lot of marketing and momentum because they're going to want people to deposit with them. One of the world's top banks issues a bond that can be bought with Bitcoin. So this just, adds that legitimacy as a world reserve sort of currency and asset. And I don't think it's a coincidence that a Chinese bank is doing that. So anything that's competition for the US dollar, they tend to get behind. Mining, it's a power play, pardon the pun, but a listed firm selling $40 million of shares for 1 Etherhash worth of Bitcoin mining power. So big institutional money now getting exposure to mining as well. I love it. Slippery slope as a new mining pool actually censors a transaction. This is not what we want. We do not want a centralized mining pool that's these guys are actually whitelisting addresses and choosing like which transactions they're going to censor. Like I'm just so against this. So I hadn't really heard of them before, but this is Block-C, a mining pool. I'm not really sure why they're doing that. And anyway, let's make sure that we get that hash rate up with non-censoring pools. Bitcoin mining fees have plummeted. So we actually had the mempool of transactions cleared all the way out to zero, which is like it was back pre-2013 when you could send a transaction for zero fee and it would get included because miners were happy just getting the block rewards. So I think so many people have switched to maybe other chains or second layers on DeFi that a lot of that congestion is not really on Bitcoin anymore. I think more and more we're finding out that whether it's Uniswap or Synthetics or Loopring, a lot of these are rolling out their layer 2. So this week you might have seen me tweet this video. This was a layer 2 on Uniswap.
Testnet.
It's so easy to use. You wouldn't even know it's a layer 2, guys.
Very cool.
Turn that sound down. You wouldn't even know that it's any different. It's literally just click the same buttons, except for it's happening on a layer 2 solution. So it only costs maybe 0.1 of a cent rather than $10 when those gas fees are really high. And that is great news because Bitcoin is becoming more and more of like this HODL asset, reserve asset. And I know that frustrates some people that are maybe OGs that want to see Bitcoin as more of a currency. Now that might happen within future improvements and scaling techniques, and if the Lightning Network gets better and better user interfaces. But at the moment, the big value proposition from the smartest investors in the world is not owning a fiat currency or anything that can be debased, censored, shut down, the rules changed, and Bitcoin just represents the opposite of that with its features and decentralization. So, look, if you want what's best for Bitcoin, you can't really tell people what it is and say Bitcoin's not that. Bitcoin will be whatever it wants to be to different people. Now, if China have capital controls, Bitcoin is still a good currency for some people. For people like Ray Dalio, he's still not convinced. I think we've got an article here in just a second. I haven't sorted these ones for you. Hold on. Where are we? So Ray Dalio poo-pooed Bitcoin this week. Here we go. So Ray Dalio was saying that he believes that nations are going to outlaw Bitcoin if the price keeps rising. And just this afternoon, we had Jack on Twitter come out and say no. One word he tweeted. He's actually friends with Ray Dalio. So that's probably the only thing that could stop the bull market rally, I would say, if all governments get together and shut down Bitcoin. But I just don't see them doing that. It's so well ingrained now. Investors like, Stanley Druckenmiller are involved. They don't get involved if they think that it's a risk of being shut down. So I think the genie's out of the bottle. We've definitely come too far now. A couple of things I just wanted to mention. This was about the chain split. I just sort of touched on that, the issues there. Bitcoin hash rate. So in last month's mining episode, we spoke about how it had really pulled back that hash rate, and there'd been a rotation from different parts of China, the wet season versus the dry season. And funnily enough, that's bounced back 42% in 2 days. Now, I think the way we measure this is a little bit of a guesstimate as well. So possibly it was never that big of a drop in the first place, but you always see these headlines to get clicks and make people emotional and fearful. And the reality is that 2 days later, nothing's changed, and just don't ever overreact to the news. I guess that's my message. I want to throw this one in here as a bit of a joke. So, look, everyone was excited when Stanley Druckenmiller said that he owns Bitcoin, but hey, is Raoul Pal saying that he finally owns ETH? Is that big in news? I think Raoul's been buying for a few weeks or months now, but sure enough, I think he had a first taste of just the maxis, and just whether it's their immaturity or just that sole focus, that it's just so tribal. Everything goes out the window. They used to like Raoul. Now that he's bought another coin, give him a hard time. It's just so ridiculous when you think about things like that. We had the Aussie Trump, as Cointelegraph have referred to him. So this is Corey Bernardi. He's a former Aussie politician. He went to the World Champs for rowing. Sorry, Corey, I said Olympics in my tweet. It was World Champs. But he's well known. He's an investor now. He's got a newsletter. So he's telling people about Bitcoin. And it's just one by one, this momentum. Stansberry Research, these guys are massive. Hundreds of thousands, millions of followers for all the newsletters and subscription services they have. And they're bullish Bitcoin. So Daniela Campone, that used to work for crypto, for Kitco, and talk about gold and silver and Bitcoin more recently. I spoke with her. She's at Stansberry Research now. So awesome interview. I was so glad to meet Daniela because she did help me. Maybe she's got a bit of a clickbait headline here. I do personally think that Bitcoin is going to get to 100,000 in the next 5 years. And then after that, let's see, maybe $1 million 10, 15 years out, but one step at a time. Alan Kohler with Bitcoin again on ABC Nightly News. I'm so glad I reached out to him a couple of years ago, and he did ring me up on the couch on a Sunday night. And I'm not sure if it was just me that convinced him, but this is an example of taking the time to explain crypto to people, and they can warm to it, adopt it. And next thing you know, they're the biggest advocates. So look, well done on Alan for keeping an open mind. Chris Judd, for those of you that don't know, legendary footy player. He's out there tweeting to his followers. He's got a podcast. He's got his footy mates, sports mates. But people see this, and it's just normalizing Bitcoin and crypto in the eye of the general public. And we've gone so far now that I think the seeds have been planted in just about everyone's mind. You'd struggle to find people that aren't aware of Bitcoin now. And once it keeps going higher and breaks all-time highs, that's when they go, you know what, I can't keep watching this. And they get the FOMO and they charge in. That's how these cycles always work. Chainalysis want to help the Fed sell these millions of dollars of forfeited Bitcoin. So last week we had that huge amount, $1 million of Bitcoin from a really old address that moved. We found out it was the Feds and Chainalysis. And for those of you that don't know, way back in 2013, we had a huge amount of coins get auctioned off in the US. And it was actually Tim Draper that bought them. I think it was $250,000 at the time. Maybe more, I'm not sure, but anyway, huge amounts, and they're going to have to do the same again. And what this is going to do is an institutional investor, maybe Stan Druckenmiller or someone like that, is going to swoop in and buy these, because remember, there's not a lot of liquidity, and you've got to do all this negotiating with OTC deals. Buying off the Justice Department or whoever it is a very attractive option for a very wealthy investor. So don't be afraid that there's going to be a lot of Bitcoin being sold. I think someone is going to snavel that up. All the billionaires are suddenly accumulating. I think this is something I mentioned as well many times over the years. Think about all the rich oil sheikhs in Saudi Arabia and throughout the Middle East. They've got their cars. They've got their gold in India. Different cultures have different things. Property in Australia. I think billionaires have now caught the Bitcoin bug, and no one wants to be first, but now no one wants to be last. So the amount of billionaires that want to buy Bitcoin is surging. But just remember, there's only 21 million Bitcoin out there. They just simply can't get their hands on some. There's not going to be enough on exchanges. And everyone wants to sell, and everyone has their price that they will sell. But I think it's a lot higher than here. I don't think many people are going to sell their Bitcoin or all their Bitcoin under 100K. Some people sell a little bit at maybe 20, 30, 50. But I think if we, in this world where the money printing continues, then $100,000 for a Bitcoin isn't that expensive. Now, people like Michael Saylor are saying that gold and Bitcoin can't coexist. That is one end of the spectrum, okay? Now, Ray Dalio is saying that Bitcoin's going to be outlawed and he's more bullish on gold. So the truth is always somewhere in the middle. And I think that they're both going to exist. I think there's trillions and trillions of dollars that is going to exit the bond market and the currency markets and go into gold and Bitcoin. We've seen that already. The numbers are continuing to climb. Grayscale, this is just more proof of that fresh, smart institutional money. This is their largest crypto capital raise week ever. $240 million in new capital. Okay, amazing stuff. So they're buying 15,000 Bitcoins a week. And this pace is increasing, guys. So, I mean, you can tell in my voice how excited I am. And that is obviously coming through in the charts now. Absolutely parabolic. We've surpassed that high that we were all sort of waiting for, that 14K. Very strong week on good volume again. Where we're at now, let's just zoom out. Depending on what exchange you're looking at, these wicks are slightly different here. Let's go back. Let's have a look at another one here. BTC USD Coinbase. Alrighty, so this is around the level, slightly different. Like I said, it's kind of low 16,000s. We've touched that and had a bit of a pullback. Now, when we get to these levels, which are overbought RSI, historically, that is where we normally have a pullback. So look, overbought RSI, back here. But in a bull market, a true bull market, we can continue higher. And everyone thought that this was the top. Let's just put it on log scale so you can see that clearer. 1,300, it's the top. 1,300, 1,500, 3,000, 5,000. Everyone kept calling these tops each time. So I think in the grand scheme of things, when you put it on log scale, to me, it still looks like we can blast off. So would a little pullback here be super healthy, considering, on the daily chart, we've started to go parabolic? I don't think we've gone vertical yet, and normally these things do end with a vertical rally. So, a little correction now would be perfectly healthy, and we've already had that for 2 or 3 days. Maybe this is the little bull flag, and that is all we're going to get, just like we've seen on every occasion here. It hasn't given many people a chance to get on board. So, could we finish with something just absolutely crazy like this? Possibly, sure. But what I would say is, to me, it more depends on what the stock market is going to do. So at the start of the week, the stock market had a really, really ugly open here. Big wick up to all-time highs, massive rejection. But then it kind of recovered on these vaccine hopes. So this is the sort of thing that I'm going to be watching about where we get to here. Can we get through that 61.8% that I love on this bounce? Because I think there's still a lot of a relationship there, and Bitcoin's fairly fragile at these levels with what's happening in the global macro world. So look, gold got absolutely smashed this week. We're probably lucky that Bitcoin didn't get smashed to the same degree, 5% in a day. The US dollar, is the money going to continue to flow there and seek as a bit of a safe haven asset, or is it going to look elsewhere? So that's what I'm watching, guys. Ethereum's been a powerhouse as well. That's now had a little bit of a double top, as you can see here. Really important weekly close. A close below these levels, and yeah, I think the correction would then become extremely, extremely likely. That's what I'm watching, guys. Members, I will talk to you tomorrow. I hope you've all had a great weekend. Please smash that like button. Share all my information and the free resources we have with your friends and family that are getting interested in this space. I'll talk to you again soon. Cheers.